Hey everybody, Patricia Young with Follow My Heels Home, brokered by Real Brokerage, covering Dallas, Fort Worth, and Charlotte, North Carolina. Welcome to Let's Get Real, the home edition. So today we are doing our home buying seminar. We did one back in October and we said we would be back at the beginning of the year. And boy, do we have a lot to talk about. So joining me today is Bali Mendals, my awesome lender. She is with Supreme Lending. We're going to talk about basically the steps to getting into a house. And of course, mortgage is a huge part of that in the first step. And then once Bali goes in, then we're also going to introduce Dane Wilson. He's with Lender's Choice Credit Solutions, and he will talk about credit. So whether your credit is ready right now or whether you got a little bit of work to do, Dane's going to tell us the steps and why credit is so important right now. So I'm really excited. So right now we're going to bring Bali Mendals on, and she is going to talk about all about the home buying process, right, Bali?
Hey,
welcome.
How are you?
Doing good, surviving. We still have our hair. Right. This is a good thing.
Right. I still got my hair too, some of it.
So, home buying, huge, obviously. Yes, and one of the biggest steps for somebody to get ready is to talk to a lender, a phenomenal lender like yourself, to talk about the entire process and why this is so important and why it's more important to be completely ready even now. So let's go into that.
So the market is a little crazy right now. I'm sure everybody's heard it. And if you haven't, it is a crazy market. I think it's been a long time since we've seen it this out of control. Last year, I had it to where buyers that even that had less money down were still able to get into a house. But this year, it's completely different. This year is basically, you can't waste your time. You need to hurry up and get qualified. You cannot be a buyer that goes out into the market and just thinks that you can go out and go look at houses. It's not like that right now. It's a huge seller's market. If you are not pre-qualified and you want to go look at a house, you're not going to make it in. Because why? There's about 50 plus people lined up to look at that house that are qualified and have all their ducks in a row. Any customer that calls my agent sending me to qualify, we don't let them go shop until you have all your documents into me. And when I mean documents, I'm talking paychecks, bank statements, tax returns if needed if you're self-employed, W-2s, assets, all of it. I review everything to make sure all your ducks are in a row. We knock out any surprises up front, because it is a seller's market, and the listing agents also want to try to close a little bit quicker too, because you're competing against all these offers. So it's better to always make sure you have all your ducks in a row before going shopping, because you are competing against a lot of people out there. An example, I had a customer who's in process right now, and when I say it's that crazy, and I'm not lying, 30 plus offers, my borrower went ahead and basically he gave 60 over asking to win that offer and waived inspection. So you are totally competing against a lot of people out there. It's nuts. I've never seen a customer give that much high just to win an offer right now. And he is self-employed. A lot of documents that needed to be given to me. A lot. And I'm a lot. I'm not even exaggerating, but he made it happen within 24 hours. We were able to get everything put together, and he ran after that property to beat all the other offers that were on there. Very competitive.
Now, it's very competitive. And I know people are probably listening to this right now going, okay, 60,000 over. I think that right now, it's really important. That's crazy to think about.
Right? Absolutely mind-boggling.
And the funny thing is, it's, my team here, my team in Charlotte, this is not just here, people, this is everywhere. This is all across. We
talk. This is in Charlotte as well.
It's in Charlotte as well.
Market out there as well.
Yeah. So it's crazy everywhere. So, I think the biggest thing is with buying a house, and especially being a first-time home buyer in a market like this, is that you really need to be prepared. And that's why working with an agent like myself and Follow My Heels Home and Gina, and working with a vendor like you and working with, Dane, it's very important because we have to know the steps to help these people get into a house. But two things you definitely have to have is one, patience, and maybe pray a lot. And two, you have to have money, right? I mean, there are programs.
You gotta have credit.
Yeah, yeah, you have to have it.
Credit's a big deal.
Yeah, talk about the types of programs and stuff there are in types of
So
loans.
I mean, every program. I mean, we have the down payment assistance, we have the VA, we have the regular conventional, we have the FHA. So I mean, it's whatever the customer, is wanting pertaining to their circumstances. So that's the route that we're going to go. Another thing is too, why it's so important to go ahead and get qualified up front is because you may feel and think that your credit is great. And we have had multiple times where customers don't know a surprise hit on their credit and just want to go look at a house. Well, you don't want to waste anybody's time right now. So it's better to talk to a mortgage lender like me. Let me pull your credit, because if there is surprises, this is where Dane comes in the picture to help fix their credit. So they're not out there shopping and excited after looking at all the houses to realize there's some stuff that needs to be fixed on their credit.
And that's very true. And I think sometimes people will call because they get excited. We'll get leads off our website and people, you call them and I want to go look at 123 Main Street. Okay, that's great. It's not that we don't want to take you, but the problem is we don't want you to fall in love with something and then it's a little bit out of your range, or you're not there yet. And it's one of these markets where it always is. You don't want to get too discouraged. I mean, I always believe that the right thing will come along and everything happens for a reason.
Exactly.
There are steps in this market, like you said. You can't just be loosey-goosey. Okay, we'll deal with it when we get into contract. I mean, we shouldn't do that anyway. I mean, good agent will not let you do that. But I think it's understanding, like money. It's not impossible. It's just how everything has to be structured. I mean, I think once you sit down and have that consultation, then people understand, okay, here's your numbers. So normally I would say, okay, here's what we have to pay for A, B, and C. Here's what these numbers look like, and that's where you come into play.
Yeah, and it is, honestly, it's everybody's life is so much easier if the customer would just get qualified first.
Yeah.
Everyone's life's easier. It knocks out all the surprises. And then the customer, honestly, after we've gone ahead and qualified them, it's super easy after that. Yeah. And it's going to be a smooth closing as long as the customer follows all the instructions that we've given them what not to do. Like go buy a car or anything else behind our back.
Quit your job.
People will never find out about it.
Quit your job. Oh, I quit my job today. Oh, okay. You know how we react to that because it's happened.
Yes, it really has.
So what type of documentation does somebody need? For somebody definitely who's never bought a house before and they say, okay, I'm ready. I've got my cash. I'm ready. Let's do it. So what did they need?
Paycheck stubs, bank statements, tax returns, W-2s, and W-2s is always last 2 years. I need to see the assets, where's the money coming from for the down payment. These are all simple things. So, I mean, that's what they would be providing for me to take a look at everything. And of course, once I pull credit, there might be things on there that I see that the additional extra documents come in from.
Mm-hmm. Okay. So, and that's stuff that everybody can get. And here's the thing that's great with Bali, because we've worked together for so long. When you first talk to me, then I say, great, I'm going to put you about, I mean, she gives you that list up front. So it's not like you don't know what's expected. And what's great about it is the communication. Because then okay, so once that happens and it goes into underwriting, once we have the contract and they're in contract and they go into underwriting, then explain. Sometimes there's some additional documentation that's needed.
Oh, it's updated stuff. It's up at that point later on when you're dealing with me and it goes into underwriting. Honestly, it's just the updated stuff and things pertaining to your earnest money deposit that goes on a house that we need verifications on. Things that happen after the fact that a contract comes in. But I mean, we walk you through it. We walk you through every step by step. The minute I have qualified you, I've set those expectations, what to expect with me once a contract comes in and what's out of your pocket too.
And the biggest thing is that people have to understand when you are in this process and you want to buy a home and you're here mindset. I mean, and for as challenging as this market is, this is why we like to have everything up front. This is like, we want you to know your numbers. And the thing is, communication is a really big deal. And Bali and I and Dane are the same way. We are very, sometimes maybe we over communicate, but we're never accused of under communicating. But it's really important that we get the documents that we need. We get the answers that we need, especially in a market that moves this quickly. And
Right.
the thing that's great about Bali too is that when we submit an offer, and especially in a market like this, or usually anytime, a lot of times the listing agent will call, right? You get calls from listing agents
And they're
wanting
shocked
to.
that I answer my phone. They're
Yeah,
shocked that I
they're
answer
shocked.
my phone.
Yeah, because a lot of lenders, and it really does matter who you work with. And like I said, I've been doing this for 16 years and it matters. And the people I work a certain way. I expect the people that I work with to answer the phone. Things happen, I understand, but a lot of times you can't get a hold of people.
Right.
It's frustrating. So this way, when you are fully prepared and you have all your ducks in a row and you guys are pre-approved, then when the listing agent calls Bally to get that information, she's going to say, hey, this buyer's good to go.
Yeah. And of course, I speak in confidence because I know my customer. So
Yeah.
it makes the listing agent feel a lot better after they've spoken to me because I'm not sitting there on the phone.
Who? Yeah.
What documents?
And it's very
No,
easy to apply online too, right? You just give your app and they could just apply
yeah, they
directly
just go to
online.
my website and they apply. Always better to be, every customer that I deal with has my website, so they just go online and apply, and then we set them up with all their needs list that we need up front, so they have every inch. I mean, I pretty much get close to about 99% of the stuff up front, and then once they provide me all of that, and I won't work on the file. I'm very particular. I don't touch a file unless you don't provide me paperwork. Because if you're not providing me paperwork, then you're not a serious buyer.
And I need a full approval letter before. I need that. I need to know that Bally's got your stuff, that you're good to go. Because like I said, there's no point in shopping and wasting time. Because I mean, if you want to go look at open houses, there's open houses every weekend.
Oh, and exactly. And I tell the customers, I mean, you and I, we worked together for a while, and every customer that comes through, I tell them, I'm so upfront and honest, and I tell them, I said, look, you can't go shopping. You can't go look for a house, and I can't release a letter to Patricia until you give me everything I need.
Right.
So, I mean, at that point, they have to get on it if they want to go look at houses.
And that's it. And like I said, there's steps. And we know people get excited and stuff, but by doing this, it's going to, vindicate that you're good to go, that we write that offer. And like I said, we'll get into the offer in a little bit. But now, if Bally does run some credit and there's some issues, then that's where Dane comes in. So now I'm going to have Dane talk a little bit about the credit and kind of how that works and where you need to be. And, so yeah, I think he's
going to maybe have Dane talk about Credit Karma.
Oh, yeah, we need to talk. Yes.
Please.
Yes. Dane is going to explain all that, right, Dane? I think she's going to pop him in here. Yeah, so Dane is with Lender's Choice Credit Solutions, and he is phenomenal. People, when he helps your credit, it is the real thing, because I know there's a lot of nightmare stories about that, but Dane is definitely great at what he does. So I'm excited. We had him on in October, and a lot of people had questions. So we'll go a little bit over the process and why it's so important. I'm glad you're joining us again today, Dane.
Hey, how are you?
Hey, I'm good. How are you?
Doing good. Thanks for having me.
Well, thank you. I know it's been a little bit crazy.
Yeah, it is. It's so busy.
So credit, Dane, how important, not only all the time, but especially with a crazy market like this, how important is credit right now?
Yeah. So I would definitely say in the 10 years that I've been doing, and it's more important right now, or more of a factor right now than ever, because first of all, rates are so low and so many people are trying to take advantage. So we're helping people that are trying to qualify, but also people who want to refinance or want to take advantage of the good rates by, getting scores up into the 700s. So, and then also because of COVID and the restrictions and credit scoring increasing, it became more of an issue because we had people coming to us that were qualified, but then all of a sudden the score minimums increased and then they weren't. And so they had to kind of act fast to put together a game plan so that they could, still move forward with buying a house. And so between the interest rates and, I was doing a class yesterday and we're discussing forbearance with the mortgages. And so people selling their house and then buying a new one, and how does that affect with people in forbearance? So there's so much going on right now for sure.
That's good to talk about right now, because if some people were selling their house and they did a forbearance, explain how that can affect your credit.
So I got a call the other day, and this person had their mortgage in forbearance, and they were trying to sell their house and buy a new house. Well, one lender said that they were not able to get them approved on the next house until like payments were being made again on on the mortgage on the previous house. They found another loan officer was able to do it, but they had to put a lot more money down. It was kind of just a weird situation. And so ideally you want to come out of that forbearance as quick as possible and make a few payments. I'd have to ask Bali if she knows the specific number of payments, but I have seen having mortgage and forbearance hold people up if they're trying to sell and then buy a new house. Also, so the way that the creditors communicate with the bureaus, there's a language or a system that that sends the information, sends the data, or furnishes the data, and they didn't really have a good way of communicating the forbearance situation when COVID hit. And so I've seen a lot of people with late payments on their credit report while they were in forbearance. So, it's just an error, but just the communication there was a big breakdown. And so people are, again, kind of scrambling to get those things worked out. And so, I would say it's caused a lot of issues. And if you're thinking about selling your existing house to buy a new one and it's in forbearance, I think probably the best thing to do is just get out of the forbearance as quick as possible and start making payments. Because I think probably some people took advantage of the forbearance offer, but didn't have to, or didn't end up having to. I think that's probably a better way of saying it. Some people didn't know what was going to happen. They didn't know, and so when they got that opportunity to, take advantage of forbearance, some people did it thinking, I may need this extra money, and so, that's what I've seen.
And if somebody does, like you said, some people were deemed late, but they weren't. So that was easy. That was an easy fix. What if, I've come across people who've been late with mortgage payments. So what is that? What does that do with credit, especially especially mortgage? That's huge.
It is huge. Yeah. So specifically how much it impacts the score is just dependent on the rest of what's on the report, the full story. But you could see your scores drop 100 points. The biggest percentage of your credit score is your payment history. And so a 30-day late is very important. I was teaching, like I said, at one of these classes yesterday, and just having a conversation back and forth with someone on, you got to kind of have that feeling in your stomach if you're not sure if you made your payment yet. And, I wouldn't be able to sleep at night because I just have seen what a 30-day late can do. And, some people obviously were in a position where there was nothing that could be done. Right. Some people just don't, they're busy. They don't take it that super seriously. If I miss a payment, oh, well, I'll catch, it's just, and that doesn't apply to, specific, that's anybody, right. You might have millions of dollars and you still just don't, you're just busy. And so, that's something that I try to teach on, is just keeping an eye on your open accounts. And then one thing that I did a lot this year or I guess now it was last year, people who were losing their job or they were temporarily laid off, is sort of sorting through what, if you're going to have to miss a payment, which ones can you sort of slide and get away with versus the ones that you need to absolutely make. Obviously, the ones you would want to make are the ones that are reporting on your credit report. So credit cards, mortgage, auto loan, anything that's going to report with that, with a 30-day late, those would be top priorities. Anything like a utility bill or something, those would be the ones that you have a little bit more time on, if you had to pick or choose which bills you were going to pay.
Right. Well, and that's important, but some people got into a position. So let's go with like a person that wants to buy a house, and let's just say they have, 620, 630 credit score. And I know some lenders like Bali, I can do it. I know the better your credit score, obviously, the better your interest rate is going to be. That's more important. So what do you suggest when it comes to this? Like if somebody wants, I know every situation is going to be different, but if someone wants to, up their credit score some, like what's this process?
So the process for me, so if you go online and you Google how are FICO scores calculated, it gives you a pie chart and it breaks down the categories that make up your score in order of, importance to least important. So when someone, whether they have, less than perfect credit or whether they have average credit and they're trying to go, a little bit higher to get a better interest rate, still, I use the same process. I start with the most important thing, and that's payment history. Is there anything that can be done with the negative or the positive to make it, to get rid of negative or enhance the positive credit? That's going to help more than anything else. Somebody who has average to, a little bit above average credit scores, maybe they're perfect in that category. Well, we'll just go to the next step. And so we'll look at credit card balances. We'll look at, do they have an open credit card? What are the, what are the balance to limit ratios, your overall utilization on credit cards? So then we look at strategies like, a balance transfer or using an installment loan to pay off a credit card, which Bali, I had a client with Bali that we got this guy, I think had 5 or 6 negative accounts in the credit report, got every one of them off, but he still wasn't where he wanted to be. I mean, he qualified for, he was in the 600s, but he was wanting to go higher. He just had some credit cards, and so we used a loan, paid off the credit cards, and boom, that was all that needed to be done. So that would be the next step. And so just going down the list, and and it is, like you said, situational. So what it ends up being that works is yet to be determined. It just depends. But there's always a way. Those are the ones that are sort of more fun for me, because sometimes it's not always something that's so obvious, like pay down your credit card. A lot of people,
Right.
They don't need to come, to a credit expert to know that, to pay down credit card balances. Knowing where to put your balances. There are, certain percentages that give you higher scores than others. And so that's, I think, very important, or the right number of credit cards. I've helped people in the last 12 months that they had positive accounts that weren't reporting on all 3 bureaus. It was just, sort of a glitch or an issue with with the credit bureaus, and they didn't notice it. It just kind of slipped through, and and so I was getting handed a file where they kind of thought maybe nothing could be done, but that's all that needed to be done. Was we needed to get all 3 bureaus reporting the positive history so that they got credit, for their on-time payment on all 3 scores. So just anything like that, just work our way down the list. There's a lot of different things that can be done other than just the big stuff like pay your bills on time, pay down credit cards, that sort of thing.
I think it's important too that people check their credit, maybe possibly yearly, just to see where they stand. Because I know a long time ago, my husband's last name is Young. So how, that is a very popular name. So when we were going to buy a house, he found out there was some lawsuit or something. It wasn't him. So we had to fight. We got it off, with proof and everything, but it's like things can get thrown on credit. So don't you think it's good to check, your credit at least once a year?
Absolutely. And when you say like what you just said, I have to feel like I always have to say that is so common, because sometimes I mention things and I feel like someone might think, because if I were outside of the industry, I might think, yeah, but how often does that happen? It happens all the time. It really, really happens all the time. And you put yourself in the position, if you're, your house is on the market that you're selling to buy a new house, and something like that hits and you're not monitoring it, then that's going to delay. That's going to be an issue. And so I 100% agree. I think monitoring your credit, I would suggest keeping a monitoring service open, is very important. If you're not in the market, then maybe not so often. But if pretty much the first second you sit down and decide we're going to buy a house, I would think, now's the time to start looking at credit and seeing where you're at. And one thing I wanted to touch on is, no matter how far you are from wanting to buy a house, or how far you think your credit scores are, still go see a loan officer, still go see Bali, have her pull your credit report, because you cannot get online the same scores that Bali gets. There's no way. We joke about Credit Karma. That's the obvious, terrible, sort of joke in the world, but there's so many other sites that other people think, well, that's not Credit Karma, so maybe it's better. They're not the same. They're not the same. And so there's so many things you could do that would hurt you or stall the process of improving your credit by trying to use a site like that. A lot of people, if they're not going to see a loan officer, the number one reason is, well, if they pull my credit, it's going to hurt my score, right?
Right.
Well, maybe, not always, but maybe a little bit. But the benefit of sitting down with Bali is going to far surpass any few points you might lose on a hard inquiry. I say it's like taking one step back to take 10 forward. And, I've seen it both ways. I've been doing this a long time. I've seen people try to use a Credit Karma or something like that. And I've seen them just go to the loan officer, bite the bullet and do it. And it's a clear advantage to the person who does it that way, who ends up getting their plan that they need and getting into a house, for sure.
I'm glad you brought that up, because people will say that, because I'll, when they first inquire, I'll be like, great, let's get you with the loan officer. Have you inquired? Have you talked to a loan officer? Do you know where your credit score is? Because I think sometimes people know, sometimes they don't, but they'll be like, oh yeah, I checked, Credit Karma
Right,
or
yeah.
freecreditreport.com. I'm like, okay, but that's not the same. You try to explain, but they don't understand because they're like, oh, well, it said I had like 780. I'm like, oh my God. And I'm like, okay, well, or it's at 620. And I'm like, oh God, that may not be good, but that's not for me to say. But that's why I think it's really important. But can you talk about, because I get that question all the time about the inquiry. They're like, will it bring my score down 10 or 15 points? And I'm like, can you explain like the difference between if someone opens a credit card versus getting an inquiry?
Sure. So the number one thing to kind of understand, to maybe make it sink in why they're not such a big deal, if you have really, really good credit and you're a low risk, then a lot of times a hard inquiry won't hurt your score at all. Inquiries hurt your score the most if you already have a lot and you're already considered a high risk. So really, either way, it doesn't matter. Either way, if you're already, have a ton of inquiries and, you're a high risk and there's probably going to be work that needs to be done, you might as well go see a lender, find out where you actually are, where your starting place is, and go from there. So that you can cover more ground quicker. And I always say on my end, what I do with our free consultation is we need to find out where point A is. Only Bali can tell me that. If Bali doesn't get a chance to get the report, then I have to go pull a report online, something not Credit Karma, but it's still not the same. And it's just not as, it's not as accurate. It's not as small of a target to know exactly what needs to be done. And then so getting from point A to point B as quick and cheap as possible means knowing exactly where you stand right now. Bali will let us know where we need to get to, if there's specific things that need to be dealt with, or if it's just the score that needs to hit a certain point, she'll let us know exactly where we're heading. But, we need to know where we're at right now. And then it makes it easy really from there to know what to do. And so that is, I spent a lot of time on that. And then on the flip side, like I said, either way, it doesn't matter, because whether you have great credit and, then the inquiry is not going to be an issue. If you have less than perfect credit and you have a lot of inquiries, that's the least of your worries, to be honest, because I was talking about how credit scores are calculated and important to least important. Bottom of the list, inquiries. The very least, it's not, if you're calling and you're saying, hey, I need help with my credit, I have 10 inquiries, it's probably the collection accounts, late payments, things like that. Those would be, 3.5 times more significant than inquiries would be. So you really can only, let me put it this way. If I had a perfect credit score right now of 850 and I did the worst job I could possibly do in the category of inquiries, I'd still have a 795 credit score. Okay. So that's the most it could possibly, and that's if you really, and no one is, we've seen people with a lot of inquiries, but nobody is, completely lost all of those points. So
right. If you guys are just tuning in, we are doing our home buying seminar. We're talking to Bali Mendals with Supreme Lending and Dane Wilson with Lender's Choice Credit Solutions. So we're talking about credit part right now, how important credit is, and inquiring, because people ask that question all the time. What if I, shop it, what happens? So we had a question. What if somebody went and got a report directly from like, Equifax or, one of the credit bureaus? What about, is that accurate?
Well, there's a lot of places you can get a good credit report. Credit scores are different. So FICO scores, that's a different company than Equifax, TransUnion, Experian. Now, a lot of times you pull a credit report, there's scores attached to it, but the scoring model that is used is different basically anywhere you go, whether you're buying a car, whether you're applying for a house, whether you're getting a credit card, or whether you're going to Credit Karma or sites like that. So what you're not going to be able to get online, even if you go directly to the bureaus, is the same scoring model that Bali is going to use. There's just no way. Even if you go to myfico.com and they tell you these are the scores that lenders use, it's still not going to be the exact same thing. So basically you have the base model FICO, how FICO scores are calculated, but then there's industry specific scorecards that they'll place on that. Meaning if you go apply for an auto loan, they may look more heavily at your past auto history. If you apply for a mortgage, and so they can adjust based on, their industry and what they're looking for, what's important to them, certain things that, that matter more to certain industries versus when you go online. Even if you do get a FICO score, it's still going to be just weighted differently. They're going to look at your credit card balances and decide how much that impacts your score different than, than somebody else would. So lots of places you can get a good credit report online. Nowhere online can you get the same scores that a loan officer would pull, the same exact scores.
That makes sense. Okay, because that's important. And like you said, what if, okay, so if somebody has never bought a house before, and let's just say they had like a bankruptcy, and they've waited, how long would it take something like a bankruptcy to clear before they'd be good with, getting a loan?
So as far as how long a bankruptcy stays on your credit report, it's 7 to 10 years, depending on what kind of bankruptcy, Chapter 7, Chapter 13. It just depends. It could stay on your credit report for 7 to 10 years. Now, bankruptcies are the most severe type of derogatory account. More severe than anything else. So they impact your score much longer than any other type of derogatory account would. It's possible for a credit repair company like us to get those off. It's I could walk you through the process of how it's done, but it's in some ways easier than getting other types of accounts removed, because it's a public record doesn't get furnished to the bureaus. They're not sending that information direct to the bureaus where it might be more accurate. The credit bureaus actually have to get that information from companies like Pacer, LexisNexis, and so there's just a lot more likelihood of there being inaccuracies. And so that is, something, it's worth a shot. It's worth a shot at trying to get something like that off. Now, when you're applying for a mortgage, depending on the type of loan, you might have a 3-year waiting period. Maybe in some cases it's 2. That'd be a good question for Bali. But in the 3-year range, I know that you can't apply for a mortgage in a lot of cases with the bankruptcy. Probably
Right.
exceptions. I don't want to. I'll let Bali answer that
Yeah,
one.
we'll bring Valley back on because I want to talk about the difference too with understanding like credit scores. When the credit scores come and someone's got a 620 versus a 780 or versus an 805, I mean, what difference that makes? Because I think people now especially need to know, because we've had people inquire going, I've got a 700, but I really want 750. But what difference? So let's bring you both back on so we understand what is the difference with that, with somebody from a 620 to a 750.
Well, I think a 740, if you have a 740 or above, you're going to be getting the best interest rates on anything, whether it's a mortgage, a car, anything like that. Anything above that, I think you should probably try to have the highest credit scores as possible. That way, if anything does happen, you have a little bit of cushion there. We joke like if you get into 800s, it's just bragging rights at that point. You don't really need an 800 credit score. You don't have to, but a 740, gets you everything you want at the best interest rates possible. If you have a 720, 700, 680, then, in a lot of cases, your interest rate will be higher. So my thing is, it's a lot of times a pretty easy, quick fix to get that job. Once you're to that point, it's not going to be something super severe that would take a long time or cost a lot of money to deal with. So I think it's worth it. I mean, we have to do some math on what's the difference between a 2.8 interest rate right now on a mortgage versus a 3.1 or 3.2 or, whatever it is, but it's, I would think, significant.
Okay. So Bally, what is the difference between 2.8 and 3.1?
So basically, you're talking about the credit scores, right? And interest rates. I mean, it depends also on the purchase price, right? I mean, the smaller the purchase price, it's really not going to make a huge difference. The larger the loan amount, it's going to make a huge difference. It could make $80 to $150 difference. On a small loan amount, it might only make a difference of $20, $30. It just really depends on the customer's purchase price. But like Dane was saying, I mean, to get the best interest rate, 740 and above, right? And like he said, after that, it's just bragging rights. A lot of customers, will tell me, well, I'm in the 800s, and I explain to them that is absolutely awesome, and I'm really proud of you. But you just need to be 740 and above, because anything after 740, it's a pat on the back. It is fantastic. But of course, and then there's a tier between 720 and a 740. Right. That just makes a little bit of a difference in an interest rate. And then when you drop into the 600s, like high 600s, you're talking about a difference of 0.375 possibly, maybe even higher, depending on where rates are. Right now, we are extremely spoiled with interest rates, with customers in the upper 680 range. They're still getting a pretty good interest rate, and it's about a quarter to a 0.375 difference. Not very much.
Feels funny to be acting like that's such a bad thing. But if the better rate's available, then take advantage of it. But yeah, there's really, those are still.
It is. And customers are so set on these high 2 interest rates that they don't understand that, even if you get a 3.125 or a 3.25, depending on your credit scores, that's still pretty fantastic.
Yeah.
Compared to where rates were, a year and a half ago or a year ago, right? You were paying interest rates in the 4s.
Mm-hmm.
So,
and you were happy about it, kind of,
Yeah, I'm happy about it, and I get really excited for them, but then they're kind of quiet on the other end, and you're like, aren't you excited?
It's amazing. Yeah.
Right. Mm-hmm. So it's really, really good interest rates, but then, if it gets to that point, before I even send a customer to Dane, I do have a little system that I can look up to see, if the customer did this, what would it do to their credit scores? Yeah. So I look at that, and if there's nothing that I can still do on my end to even give them the what if scenarios to get their scores up, and I pass them on to Dane. But again, if you do get an interest rate of 3.125 with scores in the upper 600s, sometimes it's better just to take that, because again, you don't know how long it'll take you to go through that credit repair as well if your credit score is not that bad, because by the time you do finish cleaning up, we don't know what rates are going to be later. So
and you don't know how much houses are going to have appreciated too, because that's another real thing right now, is how houses are getting more expensive every day.
Yeah. Wow. Yeah, the only way they would want to go to Dane is if the situation is bad to where it's not something that I can fix and I can't qualify the borrower. Then Dane takes it on and then fixes it. He's my Mr. Fix-It man.
He's the fixer. I have to laugh because my husband would be one of those people that says my score's in the 800. He'd just stop being.
Yeah, I we joke about it. That to me is I love it. I'm very impressed by it. And anytime I talk to somebody with scores like that, I feel like I'm speaking to somebody who loves credit as much as I do. So I appreciate it.
Oh, I love it in the 800s, because it's kind of like you're competing, right? Against the one. Now the people that are in the 700s feel bad because they're not in the 800s, but they don't realize it's fine.
Yeah. You shouldn't. I wouldn't think spend too much time on it once you're past the 740, because it's like Dave Ramsey says, it's a debt score. So if you're, don't spend money to go any higher than that, or else it's not really helping. But yeah, I'm competitive with it. My wife has higher scores than me, and that drives me crazy. I'm thinking about sabotaging it,
And I do hear that too. I could tell you stories all day long when I'm pulling credit for a husband and wife. One will get annoyed at the other one. Well, why is his score higher than mine? I'm the one that pay the bills. It's just funny to me. But I'm like, you're both fine. It's okay.
Yeah. That's how we are. He's like 800, 805. I'm beating you. I'm like, you know what? Whatever.
Yeah.
But, I think the point is with credit, it's extremely important. And like I said, even if you decide within 6, and that's why I said, if somebody is thinking about buying a house this year, like Dane said, this is something you should look at right now, because if you do need to fix it, you have time. Plus, you got to have a better credit score. Like I said, we don't know from month to month right now what this housing market is going to do. Housing prices are extremely high right now. Denton County is up, 8%. That is insane. We're down 56% in listings of December, our last report. So it's, it's hard, but credit is something that you're going to need for everything. So I think that it is smart. So to have that good credit score, 740 or above, it only helps you with everything. And the better your interest rate is, the more buying power you have, and which is more, it's so important right now. Every dollar helps, every point helps right now, or half a point. So.
Yeah, that's something that that's normally I talk about the benefits of credit. I say one is lower interest rates, but two is if somebody has collection accounts, then that could affect their debt to income ratio, and so getting that taken care of could allow you to be able to qualify for more house. But the third thing that I've added now is to be more competitive with the market being the way that it is. If buyers have sellers have options, then you go for the one that looks the best. And so because if you have to go FHA over conventional, and you do have a shot at it, then you might be paying more over the asking price. There's hoops you got to jump through. I personally bought my first house. I went through it. We were sending pictures of like me and my wife when we got married and all kinds of stuff to try to, talk the sellers into looking at us and taking us seriously. So, I mean, if you just have a little bit higher credit score, you don't have to worry about that.
And Bali, talk about what people need to put down, because I think people are confused with that. Sometimes when they hear conventional loan, they think they need 20% down, which is not.
No, there's that. And I think, Dane, there's a question that Lizzie is asking as well, but we'll hop back to that because that question could be answered by Dane and me for the discharge on a bankruptcy.
Oh, yeah.
Mm-hmm.
Okay. But no, on a conventional, I mean, there's first-time home buyers, depending on income as well. And the last time you owned a house, there's as low as 3% on a conventional. The most common one is 5% down, which a lot of customers do. And then anything above that you want to keep going and putting down. So that's a conventional. And then FHA, you have 3.5% down.
Okay. And then
you answer that question.
Yeah, does that? Yeah, I think, because I think people
you can go as low as 3% on a conventional mortgage, as it's called a home ready program, right? Yeah. But the borrower cannot have owned a house in the last 3 years. It is literally considered your first time home buyer, and there is an income requirement as well.
Someone's asking, you do CAFA. I don't know what that is.
Tell it to
go back to the bankruptcy question.
Oh, okay, let's do that one. Yeah.
So it depends on, the bankruptcy for off the credit, it stays on your credit for 10 years regardless. So not a Dane can remove a bankruptcy off a credit report that's public records.
Oh, it's cutting out.
Can you hear me?
Yep.
Yeah. It's possible to get a bankruptcy removed off your credit report, but that doesn't mean, that if it just happened that you can go get a mortgage, because it is a public record. Can't lie on a mortgage application and say it didn't happen just because it's not on the report. So the only benefit of getting it off your report that fast would just be to improve your credit scores for, other things that you might be doing. But you still have to wait from the mortgage.
Yeah, and it depends what bankruptcy. If it's a Chapter 13, you can buy a house a day out of Chapter 13 discharged. It's got to be discharged, and it's going to be an FHA mortgage. So, and you have to have on-time payments on the Chapter 13. If you were late on your Chapter 13, we, the lender, we verify that. So if you were late on the Chapter 13, you're going to have problems getting qualified. So Chapter 13, a day out of bankruptcy, 13 discharged, you can buy a house. On a 7, no.
Technically, you can. 2 years. How long? 3 years on a Chapter 7 once it's discharged?
Typically, I believe I'd have to check it again, but I think I checked on this for another customer. It was 2 years.
So on our end, if somebody's just come through or just gotten out of bankruptcy discharge, what we're going to do, we're going to try to get it off the report, and I could go through how that works. It's possible. It's not guaranteed, like Bali said, but there may be accounts that were included in the bankruptcy that are still reporting negatively on the report. So you just want to clean up as much of that as possible. And like Bali said, technically, if you just got out of a Chapter 13, you can apply the next day, but you may not be able to if your credit scores aren't, where they need to be. And so from there, you kind of, the main thing I would be thinking would be get back in the game, like apply, get a secured credit card, start building some positive payment history if you don't have that now, because it won't take that long. I mean, I don't do it often, but every so often I've sort of encouraged bankruptcy is the best fit for, in certain circumstances. And what I say is you'd be surprised at how fast you can bounce back. It's not forever. You can bounce back pretty quick, but you have to start opening up, a new account or two and building some positive history.
Exactly.
What if somebody goes to one of those, say somebody does a credit counseling, it's consumer credit counseling, or they bundle everything and they're doing a program? How does that affect credit? What if they're in the middle of something?
Yeah, that's
Dane and I could go for this one because we know it affects your credit.
Oh yeah. I mean, in a lot of ways, doing something like a debt consolidate. Well, they call it debt consolidation. It's really debt settlement. Debt consolidation there's various things that could be called debt consolidation, but debt settlement, something like that. in a lot of ways could be worse than a bankruptcy, because the amount of time that you have to go through something like that, and then when you're done, it's not all fixed. You're still sort of at worst case scenario. Then every account is still negative on your report, and it's still going to stay on your credit report for a long time. And so, it's a long process, and most people sort of, they kind of get tricked, in some cases of thinking that it's not going to be what it's going to be. But, if you already have accounts that are in collection, you owe a bunch of money and they're already in collection and you want to do that, that might be an option. But if you have maxed out credit cards right now and you're looking at options and they tell you, oh, we can settle this for a lot less than what you owe, what they're going to ask you to do is start missing payments.
Yeah.
And so you're going to start missing payments on all the accounts. You're going to have to do it for a while, because if you call Capital One and you owe them money and you say, hey, I'd like to settle, but you've not missed the payment to them, they're going to say, no, you can keep making the minimums for the rest of your life for all we, they don't, they're not doing any favors. You'd have to go a period of time of not paying them, and then they, the likelihood of being able to settle is there. But you're going to pay that debt settlement company to basically do something you can, kind of do. I know that's, sort of ironic me saying that, because they say you can do your own credit repair, but you can settle your own accounts out. But if they ask you to start missing payments, then I would not recommend that.
No.
I would not recommend
that. And it tanks your scores. To me, when you go through a debt consolidation company, management, counseling, whatever they are, it's almost as bad as bankruptcy, honestly. I mean, they will not help you unless you become delinquent. These are what I've seen in my experience of looking at customers' credit. They want you to be delinquent first before you can get help when you get into their program. So you've already gone ahead and tanked your scores. Right. There's no point doing that. That's a lot worse, and you can't go into and go get a mortgage when you're completely behind on every single debt right now. Oh, and Sandra is asking, Sandra, can you be a little bit, what is CAFA? She's asking CAFA.
Okay.
Is that like some type of down payment assistance program?
Maybe that's like USDA or something. I don't know. Maybe.
Could be.
I know. Maybe she's great. Texting between traffic lights.
Texting in between lights. And it'll be the program that I'll email my products as well.
What if you have maxed out credit with exceptional payment history, but need to pay off before you miss any payments? What do you do? And you can't qualify for a consolidation loan?
Yeah, so that's where it gets tricky. There's some consolidation loans that you can use to pay off credit cards, like we mentioned, but you got to qualify for those, and having maxed out credit cards can really drop your scores. So it's kind of a catch-22. You're like, well, my score's a little bit higher to qualify for this loan, then I could pay off credit cards and my scores would go way up. But you have to have a certain score. So there's a lot of different options. I've helped people who have had a paid off car. There's credit unions that'll do, you can use your car's collateral. You can get a loan that way, pay off the credit cards. It'll be a low interest loan. So there are various options that you can do, balance transfer to get to a lower interest, coming up with a strategy on paying down the credit cards through, like Dave Ramsey talks about, the debt snowball. It's going to sort of depend. I would think start with the budget, find out how much money you can throw towards paying the credit cards off, and see if that fits your time frame. So do a budget, come up with how much money you can throw at your credit cards, and see if that fits your time frame when you do the math. If not, then you would want to look at options and see if there's, and I can help you if you reach out to me with loan options. If you've applied at a couple of places, there's good options that we help people with. We don't charge for that or anything, but I've helped a lot of people find a loan that they can use. But if that's not on the table at all, and I'm just trying to go through every possible option that it could be. If it's very severe and there's a big balance owed, and you don't see a way of being able to to handle that, and there isn't any other option, then that's when you'd want to possibly look at a Chapter 7. But I wouldn't, through this video, want to, that would be, let's go through the specific situation and figure it out.
Before you go down that road.
Or you can go do like Sandra. We weren't laughing at you, Dane. We were laughing at Sandra's comment about the debt. She said she can pay off the debt with Patty's diamonds.
Whatever. Yeah. Okay, so she said, what was it? It's a free grant program. She said, no payback.
There's plenty of grant programs out there. I mean, the common one that we use is Seth. So what Sandra's probably talking about is a product that probably is out in Louisiana.
Right.
Possibly.
Yeah.
And that is a product that I will email my products desk to find out if we are participating in that one.
We have,
and if it doesn't, just means,
are there
when
any
that comes up, you have to do certification.
Are there any free grant programs here? Because people will probably ask that too.
They're not. I mean, you don't have to pay it back. Seth, there's a grant program where you basically purchase and no, you don't have to pay that back. But yes,
there's programs involved in that. I mean, there's things you have to do that too.
Qualifications, debt to income ratio, credit score requirements.
Yes.
Now it's a 6 at this present time, 640 and above.
Okay. Someone had a question. My score on TransUnion is 682. Yet I tried to get a car loan with a credit union, and their poll still showed 600. How long does it take for the FICO score to catch up?
Well, it's different scoring models. So what you're pulling on TransUnion is they just calculate your credit card utilization different than the FICO score that when you're going to I guess the credit union. So they're pulling probably a FICO 8 score at the credit union, and they just calculate it differently. And so as far as catching up, it would just depend on how much you can pay down on the credit cards. Reach out to me and just let me give you some ideas of different places to go look at loan options and see. There are lenders, by the way, not mortgage lenders, but there are lenders that use Vantage scores. They use the same similar scores as Credit Karma. So if you can, if I can show you some options that have, that use Vantage scores and your TransUnion score is shown around there, then, you'd have some options. Now, there's other things that come into play, your debt to income, just qualifying for the loan, is not just credit, so that could be possibly a factor. But from what you said, it looks like, it's just a difference in scoring models. The credit union is, showing a FICO score. And so we can look at Vantage score options and go from there.
That's great info. And if you guys are just tuning in, we're talking to Bali and Dane, and we're doing our home buying seminar. And we're talking about credit and how important that is. And I mean, anytime, especially now. And I don't think that sometimes this is good, because I don't think people that have never bought a house before understand how much credit comes into play and how important it is, especially, well, anytime, but especially now in a market like this, how important that credit score is, which affects your interest rate, which affects your buying power. And, and how important it is to, if you reach out to me first, how I get you with Bali, she talks and basically tries to, get you pre-approved, gets everything that you need. And then if there's some, issues that maybe, come up on the credit, then she passes you to Dane. And then you guys, we try to get your credit score where we can, get you into that house. Extremely important.
So Sandra had a question about bank statement loans. So I'm a direct lender, and we have a broker that we can broker out to that does bank statement loans. The bank statement loans are for strictly straight self-employment borrowers only. 2 years requirement. Now, I'm a little picky when it comes to business because I'm a little bit of a control freak, and I like to handle all the loans myself that I have control over in-house within my branch with our, my underwriters, processors, all of that. So when I broker out, it's brokered out to our broker, and I don't have control over it. So that means I don't have control over the process. So I don't know when a broker is going to close because they work differently to the way we work in-house. But yes, the option is there, but I can't guarantee you how long it might take with the broker.
And I would just say, don't assume, like if you've talked to a loan officer and based on, if you're self-employed and, you think you might, if you've been told, then that's one thing. But if you just think maybe you might need to go bank statement, don't necessarily assume it. It'd be still a good idea to see Bali and look at the options on not having to do a bank statement loan. Because if I'm not mistaken, potentially the interest rates could be higher in a bank statement loan, maybe.
They're a lot higher.
Yeah.
They're a lot higher.
So just, unless you've already been told for sure, I would still go, find out for sure.
Yeah, interest rates are definitely 100% higher. And again, 100% self-employed business. You can't be just bank statements for a personal account. It has to be strictly bank statements for a business account that has your business on it, that where all the money's going to be counted from. So it just cannot be a regular checking or savings bank account for a bank statement loan. Has to be a physical business in place
Mhm.
where all the money is counted from the business account, 2 years and 2 years business filings.
Okay. And another important thing too for people, not only just first time home buyers, but for sellers, is extremely important before you put a house up on the market and going to buy a new house. Sometimes it happens, like you said, Dane, it's very important to do your credit, check your credit once a year, because you don't know what can happen. Something could be on there that's not you. You never know, but you want to make sure. So before we list houses, I always talk to sellers. Sometimes they get annoyed and go, well, I got good credit. Okay, well, that's great. I just want to make sure, because you want to it's better to be safe, and it's better to, have the knowledge and, get more information than you need than to get into a situation where you're not sure what's going on. You know what I mean? Because once a seller is in contract, they are in contract, especially.
I'll give an example if you like, just to kind of drive that point home on why it's important, even if you have good credit. So one thing that a lot of people don't realize is if you use your credit card, let's say, and you're going to put all your expenses for the month on a credit card and then pay it off at the end of the month, a lot of people do that. What a lot of people don't realize is that the date that the credit card company reports your information to the bureaus isn't necessarily the date that you're making your payment at the end of the month. So if you're making your payment on the 28th of every month, paying off your credit card that was, let's say it was nearly max because you used it all month, and the credit card company is reporting your information to the bureaus on the 24th of every month, well, then it could look like you have maxed out credit cards, even though a few days later you're going to pay them off. And so I get referred people all the time that, my scores, I thought they were 100 points higher. I'm not sure. I say, oh, well, you have maxed out credit cards. I'm like, no, I pay my credit cards off in full every month. What day do you pay them off versus what day is that getting reported? And so monitoring your credit, even if you feel very confident that you're in good shape, I mean, we say this because we've just seen so many things happen. We've seen so many. It happens all the time.
So Dane, could like customers as well, I mean, I'm sure people are probably wondering as well, they can just call the credit card company and ask them, what day do you start reporting to the credit bureau, right?
Yeah, have the conversation. It's possible to get the date changed, on when your bills due. They'll work with you on that. So yeah, two options on looking that up is just knowing what your statement closing date is helpful. But if you're monitoring your credit, a lot of times it'll show what day they're furnishing it. But I would just call, like you said, call the number on the back of your credit card, find out when they report.
Okay, cool.
So we had another question, but we're not going to read that.
I can answer this one. This is a forbearance.
This is the forbearance. Yes.
One. Okay, so now things are a little bit different. A customer that's in forbearance has to be out of the forbearance and make 3 on-time payments before they can get qualified. So they have to all be on time, no 30-day late period in the last 12 months. So if you were 30 days late going into a forbearance, you're done. You have to wait 12 months and make sure you have 12 months of straight on-time payments before you can get qualified for a mortgage. But if you never had a 30-day late going into the forbearance, when you come out of that forbearance, make sure all those mortgage payments are paid up if that's the agreement between you and your servicing company. And then you have to make sure the 3 mortgage payments are paid on time.
3.
Yeah, 1 year, if not. Yeah. I mean, you can't be late. I mean, as hard as it is, to have the forbearance, and some people, like Dane said, did forbearance because they weren't sure what was going to happen. What if they lost their job and they wanted to preempt that, but then who knew we were going to be in our homes and not working? Well, even now, some people are still homebound. So people didn't realize. Yeah. Some people did do forbearance for just, God forbid, just in case. So, but like I said, if you weren't late and now you have 3 payments, then you'll be able to get out. But that's, again, why you want to talk to, a mortgage person before you put your house on the market.
Yeah.
Please.
I just had a situation with a customer today. He was already late going into the forbearance and it has 6 months.
Yeah.
And then he has 7 payments due right out of the forbearance when it's over. Mm-hmm. And I asked him, I said, we can't do anything regardless until you've got 12 months on time payments, but you were 30 days late going in. How are you going to make your payments when you come out of this forbearance? Do you have the money? And he said, yes, I have all the money put away and I'm going to pay it. So I said, just make sure and make sure that your servicing company is not reporting this every month, being that, I'm being told he's 30 days behind consistently.
And here's the most important thing before
forbearance is doing.
Before you guys do this, I mean, I know people panicked. March, hit April, May, then the forbearance came, and a lot of people signed and went in and didn't know what they were signing. Some banks, some servicers put it on the end, but some wanted it. Okay, we're going to do it for 7 months, but at the end of 7 months, I need 7 payments.
Now, it was
modified. And they didn't realize what they were signing. So if you're still, and people are still in trouble, I mean, just because you're not ready to buy a house, someone could still reach out to me and ask me a question. And if I can't answer, obviously for parents, you can reach out to Bali, you can reach out to Dane. It's always good. No one's going to think, any less if somebody asks, a question. And it's really important when it comes to situations like this, because now we're going to start seeing foreclosure and short sales. People can't make their payments. What do we do? I mean, I had somebody call me 2 days ago and ask me this question, and I'm like, oh God, and now, 7, 8 years ago, a lot of agents used to handle a lot of short sale stuff. Now that's kind of changed a little bit. So, but always pick up a phone and ask a question. Because first of all, it'll help you sleep better at night. Find stuff, especially if you don't understand. It's always best to ask.
Yeah. I am plugging in. I'm sorry, my battery's about to die.
I did that last time. But too, if you're in a position where you're ready to buy a house, I mean, this is why it's so important when you come to me first, that this is who I put you with. And then once you are ready to go, but we'll sit down and do a consult, because I like to, whether it be Zoom, I do have people that buy houses sight unseen. I have done that. It's not unheard of. A lot of FaceTime. If you have to list a house, we can do it with precaution put into place. So don't worry about that. Just depends on how you feel. But we go through everything because we want to know wants and needs. But please understand that this is a market where you may not get everything that you want. And especially if it's a first time home buyer, it's kind of like, okay, I want 3 bedrooms, 2 bath, and a little bit of yard so my dog can go to the bathroom. You know what I mean? So you're not, the want list is really hard in a market like this. And we need people to understand it is possible, but you have to be patient. You have to have the money in place, and sometimes we have to go over. So what you're hearing, I mean, we're not going to say, yes, you have to go over. I mean, it just depends on every situation. We want you to feel comfortable because you have to make the payments on this house. So that's why I always say it's very important to stay in the budget, and it's very important to know your numbers, because if we are in a situation where you fall in love with the house and the house is $150,000 and you want to go over $10,000, you have to understand what you're bringing. You have to understand you're paying your closing costs. You're probably not going to get home warranties. You're probably not going to get a title policy covered. I mean, this is just the market that we're in right now. Every situation is different, but when we sit down, we call it truth tellers. So we're not going to paint a pretty picture. We're going to paint the actual, this is what's happening right now in this type of housing market. It's not near impossible, but it's going to be a lot of patience and a lot of, there's buyers that have written 10 to 15 offers. There's a house in Austin that, okay, I told Carla that I was going to tell you all this. Like Bali said, how much? 60,000 over on that one?
Mm-hmm.
Okay. Carla, there was a house in Austin. Austin is a crazy market right now. Okay. Mm-hmm. So they had a house that was listed for $370,000. It had 100 offers. 100. The house sold for $521,000. It sold for $521,000. It sold for $151,000 over the ask price.
Wow.
Okay, so this is
that's more than my $60,000 guy.
Yeah, we thought 50 and 60 were high. So when you hear these stories, it's true. It's very true. It's insane. Now, as for us and as for me, I always like to err on the side of caution. What if you have to sell that house in 2 years? Because everybody says, hey, this is my forever home, right? Yeah, it's forever until it's not. So if you have to sell that house in 1 to 2 years, you're going to have a problem, because you're going to be what's called a short sale.
I'm doing a
So it's kind of like you need to be careful, but these are the things that we go through. And plus appraisals. Let's talk about that with appraisals, Bali. So,
well, I mean, at the end of the day, something like that situation, we already know the appraisal is not going to come in.
No.
So the amount that's going to get financed is what the house is worth, plus whatever percentage of the down payment they agreed to.
Right.
that $100 and something, they're going to have to come out of pocket, out of their own bank account and hand it over.
Yeah.
So the house, so first of all, I would never come up with over $100,000 out of pocket for a house that's not worth it. I mean, right. I do know there's a lot of California people moving here and selling their house and getting a lot more over here. So to them, it's worth it. But the servicing company, none of them are going to be upside down, because that mortgage is going to be fine for what that house is worth. Realistically, the only person that's going to be hurting, or they're not hurting because they're offering it, the customer's having to come up with that extra money out of their own pocket, because no lender, no mortgage company, bank is going to, mortgage finance. They're not going to finance more than what it's worth. Never.
Right. So if you are going to want to buy a house, this is how this team works. I mean, you have to really think about whether you use us or not use somebody else, but just think about what I always tell everybody, think about what you're doing, and think about a couple of years down the road. You know what I mean? Because I always hear that this is my forever home. And I can't tell you how many times a year later, someone's called me and said I had to move. It's an asset, but you don't want to owe more than it's worth, because then it's going to be a problem down the road. So it's like, that's
to do that back.
Yeah. So, I understand people's desperation to get into a house, but wow, that's crazy. I mean, I heard that and I was like, wow.
Hell.
Yeah. I think we live in the Twilight Zone.
Maybe I need to go list my house. No, I'm joking.
I know. My husband's like, well, wait a minute. I'm like, no.
We're all moving into an apartment.
Yeah. Well, and people have said that, that's another thing. People have said, maybe I'll sell and move into an apartment, if I can get $30,000 or $40,000 over. The problem is, though, you got to think about what your rent's going to be. What if your rent's expensive and you figure that for 12 months?
Yeah.
And you're maybe not making as much as you thought you were making. Plus, you lose your write-off. So I don't know, but everybody's situation is different. But that's why we're here to educate you and to go over this. So if we've talked a lot. This has been some great information. I've got a book. A first-time home buyer book. If anybody's interested, please, put a comment below. Same thing with Dane. We'll have their information the same as Bali. So if you have any information, and like I said, even if you're not ready to buy a house yet, but you want to buy a house sometime this year, it's definitely good to prepare. Or if you just want to see what your house is worth, if you want to sell, we can help you with that. And then if you want to make sure you can buy and what your credit is, then that's why we're here. So we'll definitely make sure everybody's information is on here. Do you guys have any closing advice?
Mine is just take advantage of our free consultation. I always say that's the best thing that we offer, because no matter, if you need our services or not, just getting a game plan, know exactly what to do, what not to do, which helps so many people, and that's all they needed was just a little bit of push in the right direction. And so, whether it's you want to know more about debt consolidation or bankruptcies or student loans, or, what credit cards you need, how many you need, balances, where your balance is, where should you keep your balances, anything like that, we'll happy to help.
Awesome.
My closing statement is never assume, always call and ask. No question is a question.
Exactly. And like I said, it isn't impossible to buy a house. We help you. I've been in the business for 16 years. I have a lot of patience. I have a client that tell you I showed him 100 houses. I don't.
Trisha, why are you lying to people? I'm just kidding.
Listen, I'm not going to break that record or anything, but I'm just saying I'm very patient. Like I said, I've been doing it for a long time. We'll find it. You just got to be patient. But like I said, with a good team behind us, we can definitely get it done. So if you guys have any questions, please feel free to DM us, put the comments in. We appreciate everybody who's watched. And this has been great information. Every time I listen, I always learn something. And that's what the story is. And don't ever be afraid to ask the questions. So we'll come back again at maybe at the end of like the third quarter, see how everything's doing.
Yeah.
See if we all still have hair.
Maybe we'll hear somebody offered 200,000 over asking.
Yeah, we'll try to see what the craziest offer was and the highest.
Oh my gosh. Well,
thanks again, guys, for tuning in. Thank you all for listening. And we'll be back in February with Let's Get Real. Be Katie Lance. She's a social media guru. She is phenomenal. So I'll be advertising that. So make sure you tune in February. And thanks again. If you have questions, please reach out. I appreciate it.
Thanks.
Bye, guys.
Bye.